All right, good Wednesday morning on Wall Street. I'm Yahoo Finance Executive Editor Brian Sozzi, and this is Opening Bid. It is hump day for the markets, folks, but shake off that boredom because you have to work to do in the form of making money in this market. Crypto has stabilized. Meanwhile, Macy's shares are getting whacked. Upside quarter for them, but the quarter, well, it just wasn't that great. Let's get I was just at the outlook, not that great. Let's get a quick check on the major averages, get down to the NASDAQ, and check with Ali Canal. Ali.
Hi, Brian. So looks like we are opening in the red here. We were trading in the green in pre-market trading after that ADP private payroll report surprised to the downside. 32,000 private payroll jobs lost during the month of November. And even though that's bad news for the economy, it's good news when it comes to rate cut expectations. Markets now pricing in with near 100% certainty that the Fed will cut rates at the conclusion of its meeting next week. But what's dragging the major indexes lower today is Microsoft. There was a new report from The Information that the company is cutting software sales quotas tied to artificial intelligence. So if we take a look under the hood of the NASDAQ 100, let's see how Microsoft is doing. We are now down about 2.5%. It's dragging down really the whole AI trade with it. You're seeing NVIDIA, Broadcom, Palantir also moving lower on the heels of this. Of course, there is some green on the screen, and one name that had been trending is Marvell Technologies. Marvell moving higher today, up around 8% at the moment. And this comes after Wall Street really cheered its stronger data center growth outlook. So that's something to watch there. And then if we look at some trending tickers, you mentioned Macy's. We had some of those retailers reporting. Macy's, unfortunately, not seeing the stock react too much right now off of the back of their earnings report, mostly due to guidance. And on the flip side, we did hear from American Eagle. It was one of the big retail winners this morning. The stock up double digits after the retailer raised its full year forecast. And so the holiday shopping season is off to a strong start. And of course, all of us are really digging in to those earnings reports, the commentary from those executives, since we've been talking about this K-shaped economy, the state of the consumer, how folks are really feeling versus the data, and the retailers really give us some good perspective there. But again, Brian, taking a step back and looking at all three major indexes, we are in the red to kick off today's trade.
All right, thanks so much, Ali. Appreciate it. Here's what's on my watch list right now, digging beneath the crypto headlines. The volatility in the crypto space is still with us, but Bitcoin is back above the $90,000 level and crypto stocks are stabilizing. I am keeping a close eye on Trump-backed American Bitcoin. The crypto miners saw a very volatile day of trading on Tuesday, with the stock finishing the session down 38%. The stock has recovered some of the gains in the early going today, though. Tracking the U.S. economy, we are 7 days out from the Fed's decision on interest rates, but before that, we have some economic data. The closely watched ADP employer report for November showed private employers cut 32,000 jobs in the month. This continues the narrative in the market of an increasingly cooling U.S. economy that may need another rate cut. Meanwhile, Macy's issuing a cautious outlook for the holiday quarter this morning reinforces that view. Apple is bringing that smoke. Somewhat on the radar, shares of Apple have gained for 7 straight sessions. The stock is up 6.6% during the stretch, compared to a 2.8% gain for the S&P 500. So what is the market pricing in here? A big holiday season for Apple, or a big year for AI in 2026? Or hell, maybe both? We'll discuss on the opening bid roundtable. Speaking of that roundtable, Kenny Polcari, Slatestone Wealth Chief Market Strategist and host of Yahoo Finance's Trader Talk podcast. James Butterfield, CoinShares Head of Research, and Ali Canal is with us here as well. Let me come out to you, Kenny, here, because you wrote a little bit about Bitcoin in your morning note. Bitcoin has stabilized here. Is this just a dead cat bounce?
No, I don't think it's a dead cat bounce, but look, I think there's a lot of volatility in and around Bitcoin, especially what we've seen over the last couple of weeks. It's broken a bunch of trend lines, so it needs to churn. So I expect that we're going to see this up and down, churning back and forth action for a while until we get some stability. Look, I like Bitcoin. I'm bullish on the outlook for it, going out. But I don't think this is the beginning of the end at all for Bitcoin. I just think there's going to be, because we've broken those trend lines, I think there's going to continue to be some volatility until it finds its chi and then starts to move higher again.
James, should folks trust any rallies in Bitcoin here?
I think what's really been moving Bitcoin prices is this 4-year cycle and the whale selling. It doesn't fundamentally make any sense, but it has been pushing down prices in the absence of any decent, credible macro data from the United States. And it has been moving off the back of futures market expectations on rate cuts too. So when we saw Bitcoin get close to 84,000, it looked like it could fall further. But I think what really saved Bitcoin was Fed member John Williams' comments about the potential for a rate cut. And we saw the futures market completely flip on its head the expectations for a rate cut. And that really provided a floor for Bitcoin prices. And since then, it's really been recovering. And I think that funding makes sense. Bitcoin is a store of value. It's competing with other stores of value. So rate cut expectations should have a big impact. If in the unlikely situation we don't get a rate cut in December this month, then I think Bitcoin could fall off the back of it.
James, help us explain this. So Bitcoin has stabilized the past 24 hours, let's say. Help us understand that really sharp sell-off we saw in a mining company like American Bitcoin yesterday.
I think there were a range of reasons, but I think there was real fear around this MSTR MicroStrategy or strategy now, and this being this sort of doom loop where the prices fall, it's forced to sell, and then it has an effect on the Bitcoin price and it's forced to sell even more. I think there was real fear over that, and Michael Saylor stepped in and assured us with 2 years worth of dividends and debt obligation repayments. So that's gone away. We've seen a bit of a turnaround, and plus we've seen Vanguard and others allow Bitcoin ETF purchases. So those two things I think really shored up the market, and that's probably the main reason why we've seen this sort of bounce back to over 90,000.
Ali, what have you been tracking in the crypto space?
Well, I think for me, Brian, the takeaway is that this is a global story. Investors got a bit spooked when there was a possibility that Japan could raise rates. A lot of investors use the yen to fund trades in the U.S., and that includes crypto. It's otherwise known as the yen carry trade. And a lot of analysts sort of cited that unwind that we saw last August when there was a big plunge in Bitcoin, and then we saw this surge to record highs. But we have seen outflows in ETFs. Sentiment has soured a bit. Michael Burry, who we'll be talking about, famed investor, The Big Short, he had a Substack out saying that Bitcoin is worth nothing. That's not helping sentiment too much either. Although I will say that the institutions, they continue to pile in. Bank of America is now recommending 1% to 4% crypto allocations for their wealth clients. We have Vanguard that's adding some of those crypto products. Morgan Stanley, BlackRock, Fidelity, they're all in. So despite a lot of this volatility, we see Wall Street really quietly supporting Bitcoin in the background and crypto more broadly, which is very different from what we saw even a few years ago.
Kenny, let me get over to you on the economy. We saw this week started with OpenAI, Sam Altman issuing a code red alert to his employees. Do we need to send a code red alert on the economy? I mean, the job slowdown continues as seen through the prism of that ADP report this morning.
You know, I don't put a lot of credit into the ADP report because it can be very volatile, right? People really look at the NFP report. I know we don't have one. We haven't had one. But I'm not, today's report, the ADP report, doesn't necessarily cause me angst. Look, it might be causing the market angst because that's the story that they've told. That's the narrative they want people to understand, is that the labor market is softening. Oh, look, we have this data point that confirms the labor market softening. Look, unemployment is at 4.4%. That's historically low levels. That's essentially full employment. So I don't yet see that argument. I don't see that the labor market is falling off the edge. Nor do I see that the average consumer necessarily is concerned. They just spent $44 billion in 5 days between Black Friday and Cyber Monday. So there's a disconnect for me between what the consumer is doing and what the data is telling us. So I'm not in the camp that I'm worried about the job market falling off the edge. You know, I think that the ADP number, while I understand it's a negative number, I'm not necessarily sure that that really tells the whole story, right? I'm waiting for more of the government data from the NFP, which we're going to get in a couple of weeks. It's going to be delayed. I get it. But I think they've set it up for that narrative. So anything that confirms that narrative is what the market's going to run with.
Well, Kenny, I hear you saying, I personally, I just don't like this report. However, we're going to get a Fed decision in about 7 days, December 10th, that's coming.
Right.
Should a report like this seal the deal on a rate cut?
Well, listen, I think the deal's already sealed on rate cuts. I think and it's not going to make, the market's already pricing in the rate cut. So yes, I think it does, but I think that's not what investors should be paying attention to. They need to listen to what Jay Powell says about the guidance. Where are we going in January, February, March? Are we going to get these ongoing rate cuts? What do the macro data points tell the Fed, the FOMC committee about where we're going in the future? Because the cut, tomorrow, next week's cut is already priced into the market. It's already there. We know it's there. 100% the market's betting it's there. It's going to be there. The question is going to be, what does he say about the future? And that's what's going to drive the next market move. If he tends to be a little bit more hawkish or a little bit more controlled, and he sends the market this idea that maybe rates are going to stay where they will be now for a while, then we'll see how the market reprices. So yes, to the other guest point, we might see Bitcoin come under pressure. We might see the market come under pressure because everyone just wants more and more and more rate cuts. I'm in the camp that we shouldn't cut rates anyway. So this is against me, but I don't have a vote, right? I'm not on the committee.
You should get a vote, Kenny. You should get a vote. You should be on this committee.
I'm just not in the camp that the economy is going off the edge.
James, over to you. We get that rate cut next week. Is that what the crypto universe is waiting for? Is that their buy signal?
I think they're looking. Yeah, it definitely is. They're looking. The crypto market, along with other investors, are looking at lots of things. So indeed, job postings, jobs, job openings. ADP, I agree, statistically not great, but people are just looking for any kind of scraps of information as to where the market's, where the employment market's going. And I think it actually is not looking great. And what's going to really confuse things when we eventually get payrolls after the Fed decision is the shutdown and the confusion that causes, because that will muddy the waters in terms of the true employment picture, which I think is increasingly deteriorating. And that suggests that we'll get further rate cuts in January and March. And I think that onwards of dovish Fed will support Bitcoin prices.
Al, you know where we saw this K-shaped economy you talked about at the top of the show? Macy's earnings this morning. Bloomingdale sales up 8.8%. Good for them. High income shopper. Macy's sales up, 2.5%. Not so great for that mid-tier shopper.
Yeah, and really the retailers across the board have been giving us these warning signs over the past few quarters that the lower income consumer is under pressure. In that ADP report, small businesses were cited as centered at some of the biggest job losses. So that really paints this picture of how long this can be sustained. And it's actually something that I asked Bank of America during their 2026 outlook yesterday, because we do have this K-shaped stock market as well, where big tech continues to lead the way higher, whereas the other 493 stocks are trying to catch up. We have seen that broadening out, but still very much K-shaped in the stock market. And then you have a K-shaped economy. And they told me that at some point things are going to break. However, the one silver lining is that America is a services-oriented economy. That's where most of the jobs are. That's where most of the spending is. And the higher income consumer actually spends more on services than the lower income consumer. So that is why we have a lot of optimistic forecasts for GDP growth, for economic growth. Of course, AI productivity gains helping on that front as well. But even though there is some concern about the K-shaped economy, it is also something that I think has a little bit more room to run heading into 2026. But of course, we're watching everything that the retailers are telling us very closely.
Kenny, I'm just in a mood this week. Maybe I'm working out too much. I'm a little dehydrated. I put this poll out on my X account this morning. Will Macy's be around in 25 years? And it's a little bit more mixed than I thought, Kenny. I'll go over to you. Is Macy's here in 25 years?
You know, I'm not a Macy's shopper, so my guess is it will be, but it may be a very different looking Macy's than what it is today. But I don't go to Macy's, just to be clear.
Oh, you don't like Macy's? Well, if you go in there, there's nobody helps you. Nobody helps you.
That's right.
You got to find somebody. We need customer service. All right, let's on for Macy's. I want to stay with you, Kenny, on Apple. Someone under the radar. Apple shares up 7 straight sessions. What do you think is driving that? Is it more like investors looking into next year, saying, hey, you know what, this company's going to figure out its AI problems, or they're just focused in the near term? And let's keep in mind, a couple of months ago, Apple surprised this market with a very strong quarter for iPhones.
So I think it's a little bit of both, right? I think it's coming into the holiday season, so I think it's the whole Apple cult, looking to upgrade their Apple and buy new Apple products for Christmas and all that. But I also think it is looking out into next year and where they stand with AI and their efforts in that and their efforts to upgrade. Look, they just made that deal with Intel, potentially looking for Intel to make some of the chips that they use and bring that manufacturing back here. That's all positive, right? That's about U.S. manufacturing. That's about Apple becoming more of the U.S. manufacturing economy than not. So I think that's all positive. Look, I like Apple in the long term. I've always liked it. I own it. I'm going to die with my Apple. There's nothing that's going to get me to sell my Apple.
Kenny, you know it's going to be around 25 years? You and me, man.
Right. And Apple.
Yeah, and Apple. That's about it. All right, the roundtable's hanging with me. We'll be right back with them in a second. All right, coming up, we'll dive into the latest debate around Tesla stock. Don't go anywhere. My stock of the day, how can it not be Dell? What the Dell family just did from a philanthropic standpoint should be applauded emphatically. Michael and Susan Dell announced they would deposit $250 in individual investment accounts for 25 million children, an amount tallying $6.25 billion. It is one of the largest philanthropic gifts ever to go directly to Americans. These accounts have become known, of course, as Trump accounts. Huge investment in the future of America here, no doubt about it. But the headline-making gift does shed light on Dell's stock price. Stock price is up a sizzling 280% in the past 5 years as Dell has pivoted to being a key player in the build-out of AI infrastructure in this country. However, the stock is down 17% in the past month on AI bubble fears. I would also mention there is a crisis right now in memory chips that has sent prices skyrocketing. That is raising production costs for PC makers like Dell and its rival HP. Here's what HP CEO Enrique Lores told me on this one.
There is a lot of demand for memory driven by the data center expansion, and this has created both shortages and also memory price increases. Well, we have shared in the call that memories represent between 15 and 18% of the cost of the PC, so you can calculate that the price increases could be significant in the second half if we need to mitigate all through price.
All right, let's get some hot takes from the roundtable on Dell. Kenny Polcari, James Butterfield, and Ali Cannell. Kenny, coming to you on Dell. Do you see Dell as a good way to play the future of AI?
I do. I like Dell. I've owned Dell products. I continue to own Dell products. Look, it's down 17% made in the past month, but it is still up nearly 18% year to date. If you look at the chart, it came right down to the long-term trend line. It tested it when the rest of the AI trade was doing the same thing. Look at the other names in this space. You'll see it. It bounced up there, and now it's making its way back up. I like Dell, and I do think it's a way to play if you want more exposure. There's so many ways to get exposure to the AI trade. Dell is certainly just another one of those avenues.
But do you think that trade gets held back, Kenny, because of their exposure to just traditional run-of-the-mill PCs?
No, I don't think so, because I actually think the Dell product is very good. So I don't necessarily think that's a negative at all. Now, the price increases, if they come, may be a problem for the whole industry, not just Dell alone. But no, I don't see that as a problem for Dell at all. I like their product. I think they make a great product, and it's and I continue to own them. And so I like the stock.
Ali, you share Kenny's enthusiasm for Dell.
Okay, I don't know. I'm an Apple girl. I mean, maybe it's because of my generation and how Apple's really overtaken this market.
Kenny, she just called you old, dude. Sorry, man.
I knew that's how it was going to come off.
She wouldn't be the first one.
I knew that's how it was going to come off. Kenny, you're not old. You're very sprightly. Just want to put that out there for the record. But fundamentally, yes, if you look at the stock charts for Dell, they have outperformed. And like I said, they've been around for a long time. They've been able to innovate. Of course, there's concern around PC demand when it comes to AI upgrade cycles. But there's a reason why this stock has been so resilient. And it's really tough for a lot of these companies that have been around for a while to sort of adjust to this new normal, this changing of the guard when it comes to AI. And if you're in this space, you need to be able to pivot your business or else you're going to fall behind. And it seems like Dell has been able to do this. And I think to Kenny's point, people love their products at the end of the day. And that's what you need to sell these computers. James,
an argument could be made. Dell is even tied to the future of crypto. I mean, given all the servers they're building or they sell in this country to help power a lot of this technology.
It has. I mean, one of the best ways of looking at this is there's a website called Ethernodes, and it tells you different. So people host Ethereum on AWS and a host of others. Dell features pretty low on the list. It's only around 5% of Ethereum compute compared to AWS around 16 or 17%. So I think overall it's probably going to have a minimal impact on crypto prices, but also a minimal impact on Dell itself.
That is a good shout out. All right, let's turn now to our question of the day. Tesla's valuation is coming into question yet again, this time by well-known investor Michael Burry. Said Burry in a new Substack post, Tesla's market capitalization is ridiculously overvalued today and has been for a long time. Burry is arguing that stock-based compensation stands to further dilute Tesla shareholders. I had a little fun today because, again, I'm in a mood and asked ChatGPT if Tesla stock is ridiculously overvalued. It came back with this reply. Short answer is yes. The argument behind the output ranges from wild expectations around Tesla's AI ambitions to weak sales of EVs. So I want to put this question to the opening bid roundtable. How badly overvalued is Tesla, or is it undervalued at all? Kenny?
To be fair, I don't own it. I don't own a Tesla. I don't own a Tesla, and I don't own the stock, right? I never have. So what do I think it's overvalued? I don't know. I have to look at the chart to see because it's not a name that I'm in. So it'd be unfair for me to give you an opinion.
Ali, it is hard. You know, the case will be made. This wasn't mentioned up in the output on my ChatGPT search. It is hard to bet against an Elon Musk, especially when you have him being very motivated by a $1 trillion pay package.
Yeah, and that's why you saw the reaction in the stock after that pay package was approved, because if you have Elon Musk that's on board, that really is what investors want. You're not just buying this stock for Tesla, you're buying it for Elon Musk. And what's so interesting about this company is that the bears are super bearish and the bulls, man, are they super bullish. And, Dan Ives, who you've spoken with, Brian, I mean, he said it's offensive to call Tesla a car company at this point, that they really are an AI company. And you have to look into the future when it comes to robo-taxis, when it comes to autonomous driving. I think you're already seeing that across the board. I've been seeing a lot more Waymos on social media and a lot more articles about driverless tech. That's all going to come to a head at some point, and Tesla does have that first mover advantage to do that. Of course, you can always look at the valuation and whether or not to say it's a little too hot, but you can look at valuations across the entire stock market at this point and make that same argument for every single company, Nvidia included. So Tesla, of course, is just one that's going to get the bulls and the bears always going.
Right.
James, Tesla, of course, is one of the first companies to put crypto on their balance sheet. Zoom out a bit. Given the volatility we have seen the past month or so in crypto, is that movement by companies to add crypto to their balance sheets to diversify their cash, is that on hold? I mean, or do you think it will pick back up again soon into year end?
Yeah, I think at this point, it doesn't add to the credibility for Tesla. I wouldn't call it a DAT. That's a digital asset treasury company. MSTR is a kind of a pure form DAT. Originally, companies were owning Bitcoin on balance sheet for treasury management, for FX management, fears over US dollar devaluation, for instance. And that's potentially quite a credible reason to do it. But it's now being tarred with the same brush as MSTR and maybe looks for Tesla a little bit irresponsible. I think ultimately what they've done is actually quite credible, but there's, I think, some quite sort of negative news flow at the moment around DATs generally. And so I don't think it's helping Tesla. And combined, Tesla has other challenges. It's no longer a pure sort of electric vehicle leader anymore. It's losing market share to European counterparts, and being undercut on price and range and tech, etc. So, and its compressions and margin its margins are compressing. So, it has many challenges ahead. So, I kind of agree with Michael Burry at this point that it is overvalued.
Fun chat here with the group. Thank you all for coming on. Have a great rest of the week. Really appreciate it. Straight ahead, Julie Hyman has you covered on Market Catalyst. I'll be back on at 10:40 with a special guest, former Intel CEO Pat Gelsinger. Pat just secured a huge slug of coin from the Trump administration, that's not meme coin, for a semi-startup where he is executive chair. Looking forward to this. We'll be right back.